Good morning, everyone. My name is Anne-Marie Band. Today's Wednesday, January the 11th, and this is the Moneyball Morning Report for the Benzinga Pro platform. What are we looking at today? Well, we had a ton of news come out last night, all right? So a few things are trying to push us into certain areas, but the keynote is the following. It came from Tier 1 Alpha, and he said in the write-up, wow, if we continue to move at the current rate that we've moved over the last few days, it would mean that we would have a 56% annualized return in the S&P. Now, that doesn't happen. And so we know that we're running a little hot ahead of the game. And I believe that heat is actually short covering. The reason being that a lot of people are very short. They're believing all of the terrible hype of what's going to happen, and they're trying to position in front of the move. Well, when you try to position in front of the move, sometimes you lever up too big, lever up too fast, or clearly put yourself in the way that you don't want to sit in. And so when price action continues to move, what we end up seeing is traders saying, hey, listen, I got to get out of here. And so prices are moving up as people move out of the market, not into the market. And I know that might seem a little bit wonky there, but that's really what's happening. They're buying to leave because they sold to enter. All right, so there are some folks that are bullish. Now, all of a sudden, Goldman Sachs comes out and goes, hey, don't worry about it. The euro's not even going to have a recession, and it's going to be, mild to not even there. In just a couple of days, they turned coat, and that's what they're saying. Australia's CPI came out hot. Now, they're very industrial. They send out a lot of minerals and mining things that China uses. China's one of their biggest trading partners. And so they are starting to heat up. A lot of people are pushing forward. My suspicion is we have a directional market today first on the upside. We're going to push and just beat the tar out of these shorts, and then we're going to turn around and fade because we really don't have any big news. What we want to see is, does our CPI look like Australia's CPI? All of the traders that are really focused in the area are still pricing in from their models that the Fed is going to have to pivot and begin to cut rates in the second half of the year or whenever they do it. That's neither here nor there. What we want to really understand is that people are jockeying back and forth and nobody has a clear view of what's going to happen in the future. And so what they're trying to do is focus on the present. And so the market's going to ding, ding, ding in just a couple of seconds, and we're going to see how this price action moves. I suspect we get that rush to the top. Be very careful chasing, but like I say all the time, if you're looking at the market space, what do you want to do? You want to look at the current market candle in progress, doesn't matter what time frame, and two candles to the left to figure out the near motion. That clearly shows this edge at the top at 73 as relative resistance. But really, 65 is that number. So it could blow out of this area, come back and hold in this choppy range right here, and then move to the north, at which point it's going to hit the top of this candlestick. In my mind, this is what I'm thinking. This is the next region here with some kind of noise potentially at this area right here. There's the bell, right? And so this is really what we're looking at. Don't rush in unless you're ready to rush out. That's going to be the end game there. Let's take a look at SPY. And then I'm going to let you go. You can watch this very quickly. We're going to see, just like last night's video, this is just doing exactly what we thought it would. There it is, right up at the top, big gap. Okay, so do gaps fill? Yes. When is the market maker or the trader that does the gap fill, what are they going to do? Look at this. It opened right on our line of 392. As long as it holds, folks, it's going to press to the north. Where are we? Well, here are our prior two candles. So we have to go back to where we see the noise, and we can see it moving up the chain, really 392.88, 393.40, 394.27. Will it go there all at once? Probably not, but shallow fades are going to give us a range expansion because we spent so much time in consolidation, and price consolidation leads to price expansion, which leads to consolidation, which leads to expansion. That's the cycle of the market. Notice the heat map here for SPY. It's showing that this is a region that they're going to battle. So you're likely to see wicking action in this area, but when we pull back, buyers are going to come into the fray. Good luck trading today, folks. I'll see you all tomorrow.